Hey, bookkeeping fans, in this video, I'm going to show you how to find bookkeeping mistakes by looking at your balance sheet. So to get to that report, we're just going to go to reports and balance sheet. So we're just going to look at the assets section for right now. Let's look at your bank accounts. If these numbers are not very close to what your actual bank balance is, there's a couple of things going on. You could, if you pull your last reconciliation report, which you can do here. I don't think the reconciliation has been done. Oh my God. QuickBooks, you're killing me here with all these pop-ups. So if you go to this history by account, this is the sample company, so it doesn't have any reconciliations. You'll see a report. And what you're looking for on this report are items that are uncleared, especially older items that have not been cleared. They are most likely why your bank balance, one of the reasons your bank balance is off, because if an item doesn't clear when you reconcile your bank statement, there's a problem. There's either somebody's not cashing checks, you need to call them and say, hey, cash the check I wrote to you, or there's duplicates or other mistakes going on. So that's kind of how you can find mistakes that way. The next line, if you're using QuickBooks to do your invoicing, would be accounts receivable. This number is to reflect what your customers owe you. And if you look at this number and you feel that it is incorrect, say it's too large, then again, it might be tied back to your bank balances, that when items are coming in the bank feed, that instead of matching it to a payment on an invoice and recording these payments on invoices, you're creating a new receipt or deposit and essentially duplicating the income. The same way with inventory. If you're not correctly managing inventory, is just a whole other topic, but it's also a source of a lot of mistakes. If your inventory is too high or too low, it means that your expenses are being recorded incorrectly and that you're probably creating invoices incorrectly to move items from inventory to your cost of goods sold expense account. So that's another thing to consider. Undeposited funds is probably the biggest source of bookkeeping errors in all of the QuickBooks world. Undeposited funds is where, when you record a payment on an invoice, it's a holding account. QuickBooks will automatically send all payments to this account. What you are supposed to do is then go create a deposit. And then mark which items are going to be deposited together, whether you received a check or they're going to be deposited through PayPal or something. If you're using QuickBooks payments, undeposited funds should pretty much be happening. Might be bypassed or automatic. I have to say I'm not a fan of QuickBooks payments just because it adds too much drama to your business. Be sure that when you're recording payments on an invoice that you then go create the deposit. If this number is very high, unreasonably high, it probably also means it's contributing to your problems in your bank account, but also means that you're likely recording as a new sale deposits as they come into your bank feed. And this essentially is doubling your sales, which is not true. And this account should always be almost zero. It should never be a growing balance, ever. So I'm just kind of briefly touch on the last part of the asset section here, which is fixed assets. Fixed assets, most people follow the IRS guidelines that if an item doesn't cost at least $2,500, that it's expensed. If you're going to track fixed assets, be sure that your tax person is also reporting the depreciation, because this truck is not worth this even a week after you bought it. So this may not contribute to actual bookkeeping mistakes. There's just the common oversight of never recording depreciation to match what's on your tax return. So I hope you found that useful. Be sure to hit like and subscribe, and I'll see you next time.